It has been a very busy last couple of weeks. I mean, you think about it, we've had a ton of corporate earnings. We've had a Fed statement, non-decision on rates, and of course a whirlwind of political news, but the market has hardly moved. So if those things can't budge stocks, what can? Welcome to Trading Nation. I'm Brian Sullivan. Bill Baruch is with iiTrader. Chad Morganlander with Washington Crossing Advisors. Chad, it's a good question. I mean, the VIX has moved up a little bit, but the fear gauge is not really showing that much fear, even with its elevated level. Gold has moved a little bit, as we talked about on air recently, but why do you think stocks aren't moving?
So you had this great run over the last 2 months within the S&P and the Dow and the NASDAQ. You have to actually start to see a fill-in with earnings, actual real earnings and revenues start to really explode on the upside to justify valuations. And when we talk about the downside concerns, like the Federal Reserve, they became a little bit more dovish, but nonetheless, trade policy, if it's initiated and it's a more protectionist kind of policy, that could have substantial effects on long-term growth rates for multinationals, not only for global trade, but procurement and earnings. And that could be a downside risk for equities. We have to keep a careful eye on that.
Do you think the greater risk, Chad, is to the downside than to the upside, another leg up?
So I think that in the short run, downside risk is, I think, somewhat elevated for a 3 to 5% adjustment. But overall, over the next 18 months, we're looking at, or over the next 12 months, a 5 to 6% type of total return. So any kind of really major break, that's albeit if you don't have a protectionist kind of issue on trade, then we'd be buyers.
Bill Baruch, would you agree with that?
I do agree. I think there is some upside here. 2380 in the S&P is a big level. Intermediate term target around 2318 is going to bring some headwind. You know, and this 2280 has been a magnet. I mean, we've seen this huge rally, let's call it 7-8% in the S&P since the election. And markets act on perception, anticipation. So we've seen this the market build in this rally of what the trade policy, what the tax policy, what's going to be. Now we're sitting and waiting for more clarity. And if that clarity comes out and is going to be supportive to this market, those levels can easily be achieved. I'm not sitting in here being a buyer right now. I want to wait for more clarity. But to the downside, we could see a good 5% correction if some of these expectations are not met.
Yeah, and if we do get the correction, would you be a buyer then?
Yes, I would love to be a buyer at 2190, at least on the first test down there. That's my target to the downside.
Amazing how many people love stocks on the way up, and then when they go lower and get cheaper, people hate them. I've always found that peculiar. Bill and Chad, thank you. Folks, thank you for watching Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.